Alright, starting off the class, we're going to be looking at Marcy's L. Macro FBG, CEF 4-hour BPR, distribution, resistance liquidity, conservative take profit. I mean, this one doesn't look entirely bad if you actually took shorts here and had that stop placement. Didn't take it, it's marked out for data collection. Oh, okay. Wasn't mega confident, so I didn't take it on paper. And you took this level, you and Floop took it, entered off of a level this time while using the world macro model. Entered off of a 1 minute BPR, 9 AM macro. With the 9:30 opening gap, CE BPR is late. Got stopped out incredibly fast. Price dropped as soon as. I guess. Yes, I'm done moving. What do you think about this trade? Only when you took on paper. Think it was a good level. If it didn't work out, yeah, of course. I don't know what level that could have been. Honestly, I'm looking through it right now. It was around here, right, where you got like smashed out, like right here, right? Let's hop on the 5 minute. 1050, yeah, it was this one. Was it really just this right here, trying to long off of this breaker block plus gap? Was this it? There, absolutely. Oh yeah, thank you, bro. I appreciate it. I'll keep dropping market reviews as well. 931st presented gap as well. Okay. Oh yeah. Okay, so trying to long off 931st presented. I mean, I was bearish like the whole time when I looked through this. I want to see price come back down into discount because look at this expansion. This whole expansion here is unbalanced, so I wouldn't really be trying to continuously long. Even though we are bullish, I don't really want to be looking for just straight up longs to all-time highs on a Monday with no news on NFP week. So I was looking for some sort of retracement and looking at the higher time frame PDRA to know we put in a high. I think Shinobi said this. Look at what PDRAs we run into. If we completely reverse off of a PDRA like this, for example, which was also inside a second standard deviation, this is a pretty clear telltale sign that we put in a high for the day. So yeah, I think just overall narrative was pretty bad in terms of the trade because once you flip bearish, you could see obviously what did we do to 931st presented gap, closed bullet, referred back up to it, and then we continued running lower. So show that we're bearish the whole day. We could have seen this, and then we could be looking for shorts throughout another macro. In hindsight, I already marked out the two trades I more than likely would have taken. And first of all, I mean, this is just a Judas swing where we come through, we run up this low right here. Yeah, we run up this low right here, manipulation through this low. Let's take a look and see if there's any type of SMT at this low right here. I wasn't able to trade today. I didn't really care. I woke up feeling really sick. So it's either, I can either wake up, become more detrimental towards my health just to trade on No News Monday with bad conditions, or I can just sit out and wait for better conditions, wait for better price. And I decided to just sit out and wait. So it looks like we do have SMT through these two lows here. So low, low, SMT at this lower here, low, SMT at this low to low. So you can see SMT at the low. This is our Judas swing. This is our manipulation for the power of 3. Measuring it out, where do we want to look for reversal at? We want to look for reversal at the second standard deviation of the range, which is also a higher time from PDRA. So this is a good place to be looking for a reversal. Now, something I noticed on this when I opened up the charts, what did we refer back into inside the macro? Well, looks like we came down, we came back into this 15-minute BISI and rejected higher off of it. But 5-minute, let's see this, higher time from PDRA, we came lower, we rejected 5-minute BISI as well, came into the 5-minute BISI before the expansion higher, rejected off of it, we're above 931st presented gap, we haven't referred back down to it, that'd be the only thing that'd be making me look for shorts. Since we haven't hit second standard deviation, we can look for a long up to it, and the only long we would have been able to take, no PDRA here. I guess you can say we do have a high probability breaker, but the only thing I was looking at was this high probability inversion that was utilized to run through this low, coming into and running up this low right here. Keep in mind we're bearish, so I only want to look for a quick scalp for this range. Little sweep of this low right here, so we're engineering, inducing liquidity while running through this low inside of a BC, failing to tap into 0.5 of this gap, showing that we're completely bullish until the second standard deviation, which is the low-hanging fruit, which we only, on No News Mondays and these lower condition days, we only want to be targeting low-hanging fruits. Like I wouldn't even hold it against most people to take this right here and just go for like a 1-to-1 and be done for the day. Now, second standard deviation was only because I wanted to see a reversal / rejection, and we had this breakaway gap right here. Seeing this breakaway gap, I can confidently put my stop here and see that this gets tapped into and we react higher to make a run. Yeah, I mark it from wicks to body right here. So I mark it out from the wick to the body, the highest body right here. Up close candle, no, I don't use it from wick to wick. Even though it could line up better right here with second standard deviation of this high, I prefer to keep it more wick to body for me. And we came into second standard deviation after running into that higher time from PD area. Everything here just showed that I want to go short. Past this, we can start looking for shorts because we already hit this. We know that a high has been put in for the day, and this whole range is low resistance liquidity that's unbalanced. So only one run on right. So this candle, the turn would do the body before that. Wait, what do you mean? Only one? Only on one run. So yeah, yeah, that you're actually right about that. So the whole move of down close candles, I prefer to mark it out like this. This up close candle, I just want to do the whole move of down close. So if we mark out an order block, for example, this is going to be the high of the order block. So basically wick to the high of the order block. And for marking it out like this, I don't like these smaller projection legs like this. I prefer to be marking them out of the whole move, like this whole move and this whole move right here. I really just gauge it off of my own intuition and how I mark it out. You can see second standard deviation, rejection come up higher, and fourth standard deviation lower throughout here, which we're going to get into this other star platinum level in a bit. Yeah, you got it. Anyways, for this second trade right here, I didn't really see any SMT, but inside this macro, you can see we did run lower, and we also had that, as I showed you, the second standard deviation in play, knowing that we can get a rejection. We're running through this low, higher time from PD array, we'll see. So we want to see a rejection off of a higher time frame PD area to really validate this. These reclaimed BISIs would also work, but I don't really like them because they've already been utilized. So I wouldn't really say that this is too high probability of a trade. I guess you can say that this is wick theory, but we didn't really cleanly reject off of it. So this is mainly based on the 1 minute price action that was shown to us, which you can see really unclean delivery right here. Accumulation outside of the macro until we did have the run up to these equal highs or engineered liquidity, and you could see we still delivered to run out all of them, which still shows us that there's something algorithmically, whatever you want to call it. I just really like to see these clean equal highs getting ran out before continuing our run lower, which we will get to that. So going through this run, it's literally just accumulation, manipulation, anticipating distribution purely because of unbalanced range, which we aren't anticipating a full rebalance of the range. If you remember the inversion concept where we do come back into 0.5 of the range, what invalidates the run into 0.5? What invalidates it is if we manipulate through a low or a high through here. So looking at the 15 minute, look at this. This should be really easy to see, honestly. So why don't we come back into 0.5 of the gap? Oh shoot, is this measuring gap? No, it's not. Okay, but why didn't we come into 0.5 of the range? Mainly because I think I put this in all my reviews. I've been talking about this very recently because we run out the engineered liquidity here. So instead of having to manipulate here, price will just manipulate through the low-hanging fruit, the internal low, before continuing our run lower. So with this in mind, there's actually two things that we could have done. We could anticipate longs to these equal highs because we know this is going to need to be ran out to continue our run lower. And once we do run this out, we know we can be looking for shorts after. So with all these things in mind, longs off of this inversion right here would be decent. We have a high probability inversion here, but you can see bodies didn't really fully respect that too cleanly, so I would more than likely have to take some sort of secondhand entry after we start retracing into it outside of macro, which would be really rough. Or we can be looking and referring to this whole macro leg and look for anything else, which I really don't see anything. I don't really see anything too high probability that would have given us little drawdown for this, which is why I don't really like trading these no news Mondays. Typically, if I was looking for a long, I could be looking to long off of this, but you could see it still came below it, which I more than likely would have gotten stopped out unless I really thought of this as being a breakaway gap, but this is just too late into the PM session for me to be looking for a high quality trade. I mean, something like this would work if I really wanted to, but the risk to reward is just 1.5. I don't really like this. So now that we have this in mind, we did do the thing, as I said, failing to tap into 0.5 of the range. We end up running out the engineered liquidity to run us lower. Concept I've been talking about and literally just explaining a lot recently. I'm going to expand this to the 45 macro and show you what I would have done with high narrative in mind. So with a clean read on narrative and a draw on liquidity, we have a high probability inversion here. So this gap was formed within macro using the logic and knowing what we're looking for, which you could also see we have 3 drives at the highs, showing that price is starting to fail, which I wouldn't be surprised if we formed SMT here, which I'll show you in a second. I would more than likely like to take a short off of that high probability inversion. So let's see if there is any type of SMT right here. I actually think that this is closer to our swing. I'm kind of lost real quick. Hold up. So this high, SMT, SMT right here from this high to this high. You can see that we do have SMT at the highs. You can consider that to be SMT inside of macro. Something else that would be more of a cherry on top for me is if we actually started cracking correlation and forming SMTs at the highs, which I got to double check to see where we're at. I'm lost again. Okay, this is the engineered liquidity, right? Okay, we look for SMT at these highs. Yeah, I guess you can say SMT here with YM, SMT here, running through the high, SMT here, SMT here, low to high. Actually, I don't even think. I'll wait. Honestly, SMT on the 1 minute just hurts my head, unless it's just more volatile price action. I'd typically only be looking for that during the AM session. So I guess you can keep that in mind. That actually just blows my brain up. But we're going to go based off the external SMT we have at this high right here and the 3 drives. I don't even know if that was the right price. Yeah, and I do prefer SMT with ES over YM, but I know YM is still a correlated asset, so I still like to, at the bare minimum, if I see an A plus setup and there's no SMT with ES, but there is SMT with YM, I'm willing to take that. So, what can we do here? Looking for shorts here, we have this high probability inversion right here. I prefer to take this one over this one mainly because it was formed inside a macro. Now, looking at this gap here, what are we failing to do? What does this gap tell us about price? No, there is a volume balance right here. So what are we doing to the CE of this gap? What does this show us when we're tapping into it and not tapping into CE? It shows that we are bearish. Yeah, moving lower. Price wants to run lower. We're disrespecting bullish PD arrays. We're starting to run lower. What else is our reversal confirmation? What would be a reversal confirmation here to show us that shorts are primed? What would be the reversal confirmation to show that shorts are good to go? Yes, exactly. CISD. What do we do here? Off of this CIB right here, fill it to tap consequent encroachment, come here, run into the CISD, the change in state of delivery, and then we run and shoot lower. So with this run lower, you can see how large this wick ran lower. You can see this wick right here, we displaced lower. This displacement, we do not need closure below for market structure shift. We need displacement through. And as you can see, price displaced through this low, and then we came back up to form our closure. Now that we shifted market structure, we changed in state of delivery, we're showing that we're bearish, we higher time frame, SMT at the highs, we had the inducement target ran out, we didn't need to tap into 0.5 of the unbalanced range, we only need to engineer liquidity, run it out with SMT, and now we have all these signatures telling us that we have a shift in market structure, CISD, price failing to tap into 0.5 of the gap, and we have this high probability macro inversion here. So now that we have our shift in market structure, it's reasonable to look for shorts off of this. So the closure below, retrace into it, we could put our stop. I'd prefer to keep my stop at the high of this new day opening gap, high of this busy, because we're anticipating this gap not to get filled. We're not thinking of this as a breakaway gap, because we would want to see this act as a breakaway gap, which breakaway gap in the ICT 2023 mentorship, it only really needs the upper portion to be unfilled, which is the same thing that ICT spoke about in the 2024, which is not tapping into CE of the gap. So they're both considered breakaway gaps, just with different terminology, repurposed, re-explained, just regurgitated overall to make the concepts easier for other people to understand. So that's why I stay really strict with my understanding of the market's failure to tap into CE just shows that this is a breakaway gap up here. And the bodies are respecting it, showing that we're completely bearish. So for this gap, I'm not thinking of this as a breakaway gap because I know price can refer back into it and we're way too close. This here at the high of the range is the breakaway gap. And we could also be using like how ICT chooses winning PD, welcome back from your shower, but we could also do how ICT chooses winning PD arrays, and we could use the fair value gap quadrants, and we could see that this high probability inversion falls in line with the 75th quadrant, showing that this is a winning PD array as per ICT's grading dealing ranges. So 75th, 0.5, and this gap right here shows that this is winning PD arrays of the range only when we have clear alignment. This is the only one we have real alignment with. So we want to put our stop at the high of the gap, and since we already had S&T and we had all of our narrative on the higher time frame pointing to a run lower, we are good to look for shorts at this low right here. So a 51 or $1,000 NQ short with one NQ contract would be validated right here. And for our second short, if we didn't have it, we can be looking for something in 0.5 of the range, which oh shoot, wait, where's 0.5? Yeah, this is 0.5 of the range. So this isn't really clearly aligned, but we do have this one gap right here. So now that we have this one gap in 0.5 of the range, this is also a winning PD array. So we come bigger, we close below it, we have a re-entry right here. So another winning PD array come into 0.5, run into it, and then run lower. Then finally, is there any winning PD array right here? No, there is nothing. There's no CIBI. You can see no closure below, no winning PD array here. No inversion, nothing clean here. So we can look for the full run through this low right here. So those are our two entries. If you missed it, we could have relied on the macro to actually give us this inversion right here, inversing this gap, and looking for a short off of that. Does that make sense? And you can keep it as 20 minutes total for the legacy model. I'm working on making the AU version, which I need a lot more, study into it before I can actually understand if the macro PD arrays are the same, if they're different, and just how the distribution works compared to the 50, because 50 does always have the algorithmic distribution, which is something I've noticed. But with the fives, I usually try to position myself prior to the distribution. As you can see right here, we're still accumulating in 45, forming this gap right here. But look, the moment we enter 50, price has a run higher. Same thing here, we're accumulating, but the second we enter 50, price has this run lower. I mean, the macros are, you can obviously see the macros working out every single day and distributing, which is why the only reason why I'm using 45 is to try to grade PD arrays within this range and keep them as high probability to position myself prior to the distribution. So, yeah, that's really how I'm seeing price action right now. These two shorts, I really like how I'm reading price like this. And I just wish I wasn't so sloppy when I woke up, because I definitely would have seen this. If I had enough time to actually read all of this, I 100% would have taken all of this and actually balled out on this. But yeah, reading part 7, spoiling me for part 7 with the World AU. Yeah, bro, don't worry. It doesn't evolve. I don't even know. I mean, okay, the World AU, you're gonna have to. We'll just watch Steel Ball Run. We'll have a Steel Ball Run watch party. Don't worry. It's just alternate universe. Yes, scary monsters. It is. I like it though. I like referring to the models as stand names. I like Star Platinum because of Star Platinum's precision. He can stop bullets and stuff. The World is because it's time-based. The World AU because it's just an alternate version of the time-based. I mean, I really like. It makes it easier for me. And then Star Platinum level down here. Steel Ball Run party. Yeah, we are gonna have a Steel Ball Run watch party. Anyways, I have the Star Platinum level down here. 655. I'm pretty sure 640.5. Really, it is only just OTE completely aligned with 2 to second standard deviation, CE gap alignments, multiple standard deviation alignments, just a bunch of convergence with other levels. OTE 79 of the wick, perfect alignment in this range within this first presented gap on the 926. So everything here is looking really good for me to be looking for longs off of it. I'm willing to take longs. I'm probably going to hold a funded limit here on it, and then target, I think, just like a 25 or maybe even 50 points, just depending. I'm going to get quickly break even on this level because these are the type of levels that we get a quick reaction off of. So I am going to be leaving a limit order on a funded account here, and I'll be risking more than likely just, I think, 10 points, risking $200 to make, maybe even 1,000. So risking 200 to 1,000, 1 to 4 risk reward. That's what I'm after. Weekly watch ready. Anyways, any questions currently so far before I do the full data collection of this trade? Let me get a thumbnail real quick. Bias is wrong. Why it was bearish instead of bullish, just like the main few points. Overall, the whole reason why I want to be bearish is because look, this is a weird run higher. The moment off of the open, the weekly open here, is this weekly open? Yeah, this is the weekly open. The weekly open just had a parabolic expansion higher, which I don't really like trading when we have these major expansion moves because I know New York is going to reaccumulate. And that's exactly what we did. New York was really accumulative. We didn't really have any good price action. So for the whole time, I don't like to call tops, but for the reason I stated before, we did have a top put in a higher time frame PD array, which I really like. So with that in mind, we're good to look for shorts. And the final thing that confirmed shorts was the closure below the 931st presented gap, which was within here, then retracing, showing that we're bearish off of it and running lower. So what is my bias for the rest of the session? Until we get down to this level, I'm going to be bullish. And then this level, I want to see a rejection off of it. And then we can go from there going into tomorrow. Just overall, I think retracement then higher, whatever. Yeah, of course. All right. So